This is brutal, honest advice for every crypto investor. When I first started back in 2016, I had no clue about the strategies and the lessons I'm gonna cover now. So make sure to pay close attention because what I'm about to show you could save you years of trial and error. So let's jump on it. You invest on cults, not coins, and that's how you get wealthy in crypto. This is an old article from 2014 for Bitcoin, like it was literally called a cult, right? Basically, cult, I took the definition from Wikipedia, is like practices or beliefs which are considered deviant outside the norms of society. So back then, if you invested in 2014 in Bitcoin, you were like a crazy guy, right? Because it's kind of innovation. It was completely the opposite of the financial world. So you were called like an idiot or someone that you're completely beyond the current things that are working in the macroeconomy. This is another thing. The doomsday cult about Bitcoin, I actually shared this on my Twitter too. March 4, 2014. And guess what? That was the best time to buy. So nowadays everyone is talking about cults and strong community coins because basically a cult is technically coins that got really strong communities. Murad is one of the influencers that is popping up a lot on Twitter. It was Ansem before, right now is Murad. He's talking about meme coins, but he's actually confirming the thesis that if you find the top 3 most hardcore cults coins, that's how you win. And if you've been following me for a while, you know that I've been talking since the bear market of strong community coins, and that's how you get wealthy. Now, you might ask why. It's so simple. Let's take an example. Shiba Inu. Shiba Inu, it's a meme coin, but still pumped 1.5 million X. Can you imagine putting $1 and making 1.5 million back? Of course, I'm not saying all captured that, but the opportunity was there. If you capture, let's say, 20% of the move, you win so much money. So why SHIB went amazing? Because they got a strong community. What I mean with a strong community? A strong community is people actually loving something with passion. For example, look what's happening with Bitcoin, right? Bitcoin created this environment where a lot of entrepreneurs jump and talk amazing about it. For example, you got one of the most famous figures is Michael Saylor, right? Michael Saylor, since 2021 till today, has done a tremendous work on adopting and actually adopting Bitcoin and sharing Bitcoin to the financial world and all over the places, right? So this is something that is never actually beaten, even if you pay money to market. So a lot of projects actually fail to understand this kind of stuff. I actually read an article this year that Polkadot spent in just 1 quarter, I think like $40 million in marketing. $40 million, can you imagine? It's crazy. And still meme coins are making more noise than Polkadot that spent 40 million, because this is the power of a strong community. The power of a strong community is that you get eyeballs and you get free promotion, and the promotion is stronger because it comes from people that are passionate and it doesn't come from influencers that get paid, right? That's a big difference. Like, you can pay all the influencers in the world, but they'll never do more work for Bitcoin than Saylor did for free because he's passionate about it. And that's what happened with memes too. Go and comment something or write something on tweet about Doge or SHIB. The SHIB army and Doge army will come and talk and directly comment about it. You might think like, what is happening? But that's the passion. That's what actually builds a strong community. That's what brings more eyeballs, because those guys are constantly promoting the coin with no incentive to actually get paid. They love it, they have invested, and that's why it's called like a called a strong community, because if you invest in those coins, you actually will get wealthy this cycle, and you actually probably could do in the last bull run. So that's how you get wealthy. Now you might ask how I'm gonna find strong communities. For sure, this is kind of hard because at the beginning you can't have a strong community without having like great fundamentals or price going up, because what builds actually also strong community is price going up, right? Things you can watch is actually communities around their channels, their social medias, how many videos are putting every day from people that are passionate. Like, for example, how many let's call Solana, how many YouTubers that talk only about Solana, you know, what are their average views, what they're talking, look at Solana posts, what they're commenting, like real people and real data, not just fake random profiles with fake pictures. Now, this is one thing. You can actually look at fundamentals, the community, the Telegram, Discord, and see the culture inside, if they're active, if they help people, if they got incentives to actually make people promote something, and love the coin. These are all things that make a strong community and help to actually go up. And that's how you get wealthy in 2025 bull run. If you invest in calls and not coins, if you buy random coins out there that don't have strong communities and technically a cult, you're going to miss out. 2. Having questions on your mind is completely normal. I see a lot of investors when they put money on something, it'll be like, oh, what if this happens? What if that happens? What if this coin never goes up? What if the founder dumps? Like a ton of questions in their mind. But they don't get that having questions in your mind is completely normal, and it means you're early. Why? Because at the moment that you got the answers of those questions, the price would be so much up, and when you figure it out, you're already too late. So doubt, pessimism, question in your head, it's a signal that you're early on something. Like, you think Bitcoin investors in 2014 could understand or could believe that Bitcoin would be today 70,000? Like, they had no idea. If you told it, they would laugh at you and say it's never going to happen. You think Ethereum ICO investors didn't have any doubt and didn't have any question, what is this ICO, what if they scam, what if they take my money? These are all normal. Having question in your mind when you start out, it means you're early, and it happens to all. Don't pretend that you put your money and then you know all the answers and then that's how you make wealth. It's not true. You make wealth by investing when you have questions, when you're doubtful, when you're fearful, and it's all normal. You take the risk, and that's how you win. 3. If you're here to make money, focus on what brings the pumps. The biggest misconception and mistake that I see investors are doing is actually not finding the balance on why they are on crypto. Like, a lot of people go and find the best tech and they miss the biggest pumps, right? You have to understand that if you're here to make money, you gotta focus on stuff that pumps the most, because that's how you make wealth, right? A lot of people be like, oh, I found this coin, it's amazing, it got like crazy, it's solving this issue, and still it doesn't pump. Why? Because it doesn't have elements that it goes up, and you actually gotta focus on stuff that makes money, because if you're here to make money, that's what you gotta focus, right? I know so many projects in crypto that solve real world issues, and I'm talking like I'm talking banks, I'm talking in health industry, like records being held in blockchain, like real core valuable projects that solve real world issues. But guess what? They don't pump, and that's not how you make the wealth. Now, you can find the best tech and you can make the most money, right? The best tech doesn't necessarily mean the most money, and this is where people fail. They misconcept and they think that if they buy the best stuff, they're gonna win. It's not true. If you buy the stuff that got the biggest fundamentals, that's how you win. For example, what is a fundamental? A fundamental is a feature that technically it makes an investor be like, oh shit, I need to buy this kind of stuff. For example, Ethereum had this kind of fundamental that went from proof of work to proof of stake. Solana has this kind of fundamental because it was marketed as the fastest chain. A fundamental is also like a feature that, let's say, make the supply scarce. For example, it might be a burn, might be a buy and burn of the token. These are incentives that makes the supply go low, and actually it helps, right? So you gotta focus on this kind of stuff if you want to make money. You can't find the best tech and be like, that's how I win. It's not true. If you want the best tech, you might play it 50-50, because not all the time best tech goes up. And if you're here for the tech, I see a lot of people be like, yeah, but I love the tech. If you're here for the tech, then go and build, don't invest. I always tell people this. So if you're here to make money, you gotta focus on what brings the pump. So you gotta find the coins that pumps the most. If you're here for the tech, go and build something. So be really careful when you find tech, because not necessarily you have the best tech, you'll make the most money. As I said, you got projects that solve real world issues and still they don't go up. So you have to know this balance. 4. More diversification, less profit. Now, investing is all about concentration, and that's how you get the real wealth. For sure, crypto is not like financial world where it's safe and you could actually have some kind of safety. So I understand people that diversify, but I don't understand people that over diversify. There are a lot of people that be like, oh, I got 10k and I got 30 coins. Like, this is a big mistake. Why? Because you're actually going to leave so much profit on the table. Your mindset in crypto shouldn't be, I need to catch all the pumps. You just need one pump to win, right? The goal is to catch something and make the most money. It's not to catch all the pumps. Because if you put $10 to few coins that did 50x, it's more stress, it's more distraction, and still you can't achieve probably the right gains. Why? Because you're gonna have also a weak cash out process. While if you put, let's say, $1,000 in one strong conviction coin that you believe will go up and you make 100x, it's easier, right, to achieve those gains. So don't be this mindset like, oh, it's easier to do 5x in 3 coins than compared to I do in just one coin more than that. So let's take an example. Let's say I've got 10,000 capital and these are the coins I buy, right? These are like a lot of coins and these are a capital, a portfolio with few coins. Few people don't understand this kind of stuff. They think only about, oh, but I need to catch all the pumps. That's not the mindset you gotta have. Because when you actually had a broad diversification, you got a higher chance of errors. Why? Because you got a weak research process. Because it's really hard to know everything about 50 coins or 30 coins compared to 5 coins. And even let's say at the beginning you put in the real work and you actually learn everything about them, right? And you might say, yeah, but I know everything, which I agree. It's really hard again to keep up with all of them. Why? Because these coins are constantly bringing new innovation, are constantly bringing new stuff, and you can't keep up all the time with 30 coins or 20 coins all day, right? Compared to 4 coins if you bought it. Secondly, as I said, it's big distraction. Secondly, is weak cash out plan. Pretend you actually make all the money on those and you're right? Which is rare to happen, because the more you diversify, the more you actually gonna risk on something breaking because you don't have the right research process. Consider you win at all. You got also a weak cash out plan. Why? Because it's harder and you're distracted, and it's harder to build a cash out strategy and to exit at the right time if you got 20 coins compared to 4 coins. Because 4 coins you can really know like the back of your hands, right? And you can actually create a proper cash out plan because you got more focus. But if you got a lot of coins, you actually gonna risk a lot. So more diversification is less profit. Don't listen to social media that be like, oh, I need to catch all the pumps. The mindset should be, I need to catch a pump, not all the pumps. And this actually comes even for Warren Buffett. Diversification might preserve wealth, but concentrations build wealth. So if you want to build wealth, you got to concentrate. I'm not even saying buy one coin. I'm saying be smart and don't put in a 20 coins. When I see people that got huge diversification, I know they don't have the right knowledge. And if you don't have the right knowledge, fix that. Don't try to actually be like, yeah, I know what I'm doing. Don't know what you're doing. Fix your knowledge and you'll actually make money. 5, the harder it is to access, the more money you'll make. Now, I talk to clients all day and they all be like, oh, why I should buy here? Why it's not easy? I've always used Binance, Kraken, Coinbase, but you have to understand that if you want to make wealth, if you want to be early, that's what you got to do. You think Bitcoin guys could understand what Bitcoin, how you could buy Bitcoin back then? Like Bitcoin was in Mt. Gox exchange, or like a shady exchange where people had no idea how to use. Let's take a look at Ethereum. Ethereum had this ICO stage where people could actually send BTC and I think they get their coins back. But it looked like a scam. People went and be like, oh, what is this? What if I don't get my money back? And it was so hard to comprehend, right? And if you check about it, all the coins first right now get listed on decentralized exchanges, and when they reach those centralized exchanges, which is basically the easy stuff for the people to buy, it's already too late and they had most of the pumps. Shiba Inu did more than 50,000x after it got listed on Binance, and on the Binance was the top. Now I'm gonna tell you a trick on how whales operate on centralized exchanges, because retails and normal people be like, I'm gonna buy something on Binance because it gets listed tomorrow and I'm going to be quick to buy it because it's going to pump. Your mindset is good, but you're not understanding what whales do. Whales have bought earlier, right? And they're up like crazy. Let's say they're up 100x. But usually on decentralized exchanges, there's not enough liquidity to sell. So what they do when the coins get on centralized exchanges, they get enough liquidity. They get enough liquidity from the exchange and from retail, which is actually buying and probably using the strategy that you want to use, that I'm going to buy something. So whales use your money to trick you in order to take that and cash out. So that's why a lot of people right now are losing money when they're implementing this strategy. Of course, you might have a few winners here and there, I get that, but that's how whales operate. If you have to be early, it's gonna be hard at the beginning. So don't run from it, but approach it, because there's nothing like, oh, you're gonna buy tomorrow, with one button you're gonna get rich. Like, adoption is not always here at the beginning. On every coin, don't expect adoption. If coin is easy to buy, everyone knows, you're already too late. 6. How you manage the profit determines your success. A big mistake I did in 2016 and 2017 bull run is actually I acted like a big dog once I made some money. So I made some really great gains on Dash. I don't know if you remember this coin, it pumped like crazy back then. I made some really great gains. The problem is that I lost 80% of the profits back in the market, because what I did is that I made money here, I actually went and bought other coins with the idea that I don't care, it's profit. And this is what a lot of people do even those days. They made money and they'd be like, oh, I don't care, it's just profit because I'm gonna make much more. They forget what it took to actually achieve those gains once they made it. So you have to be really careful when you actually experience this kind of stuff, because you have to, that really truly shows how capable you are to actually achieve those gains. So a smart way to actually play with the profit is knowing the cycles. And what I mean with knowing the cycles is basically how much bull runs last on average. So let's say the bull run like lasts for 1064 days, but let's put it in this perspective. Let's say here it's like 1064 days. Now at this cycle, for example, right now we're on day, let's see if this was the correct bottom, right now we're on day 700. If we're on the day, let's say if we're on day 900 here, right, which is so near the local cycle, right, which will last probably 1064 days, which is near the top. If we are on 980 days, why you need to put the profits back in the market? And this is what I didn't understood, because I really had no idea when the top would be, when the cycles would end. So I actually made money at the top and went and put it back again, because I didn't understand the cycle. So when you make profit, even let's say today you made profit, let's say right now, as I said, we are on 700 days. So we are almost past 50% of the bull run. So what you have to do if you make money today is that if you put 50% of the capital back, that might be a good move. But if you put more than that, you are actually risking, right? I'm not saying in a way that you can't make money, but you're risking because it's hard to build stuff, but with 2 buttons you can lose everything. So you gotta treat with respect every profit you made and not forget what it took to get there. And this really will determine your success. So play it smart. Don't actually go and gamble all your money because you made some quick things. And it happened also to meme coins. A lot of meme coins investors be like, oh, I'm gonna put that money because I don't care, it's a meme at the end of the day. But that's how you're probably gonna risk on losing, because that mindset will cost you a lot. Because that money that you made from a meme, you need to appreciate it. Your mindset should be, yes, I made it from luck, yes, I made it quick, but still this money can help me if I put in the right stuff, not if I gamble in the next meme. And that's how people do. So I did this in 2017, so take this lesson from me and don't do that. 7. Finding the right coin is not enough. How many stories you hear from people that were early on SHIB, Doge, Bitcoin, Ethereum, but how many stories you hear from people that made real wealth? Like, there's a big difference. I hear all day people how they were early on something, but not how gains they achieved. So this is a big difference. So when you find the right coin, it's not you made it, right? It's just the start of your journey. Like, you have to understand that finding the right coin is nothing. It's all about handling those gains. Like, I can say today that Bitcoin did like 7.3 million X, and even if I share a coin today and you know that you will do the same that Bitcoin did, 7.3 million X, still you can't hold. Why? Because it's all about emotional control. Because right now you don't get emotions, right? Right now you don't get what you'll feel when you buy a coin and you're here, right? Pretend you put $1 on Bitcoin and you're up at $2 million, right? What are the emotions going to come with that? Can you handle till the 7.3 that I told you? Like, these are all stuff that you actually have to understand, but you don't get it right now because you're not on pumps yet to feel this. So don't be like, oh, I find the right coin and that's it. Like, anyone can have a coin today and say that this will do 100x or 200x, but still people can't achieve that because there's so much money involved, there's so much emotions involved, there's so much emotional control which you gotta do. You gotta plan, what if this collapses, what if never goes to my target, what if this happens. So investing is hard. It's nothing like you buy something and that's it. So don't be like, oh, I bought something, and just be chilling and just be having no plan and just doing nothing. That's how you gotta probably regret the decision, because imagine finding the right coin is one of the hardest stuff, right? But also knowing when to cash out is really, really hard. How many people you know that made millions in the last bull run and they lost it all? Like, I know people were flexing 7-8 figures profits on last cycles, but guess what, they went all silent in the bear market because they never knew how to sell. Like, I called the top of the bull run, for example, last time, and even personally I can't name more than 5 names in the total crypto industry that called the top of the bull run, and we're talking, we got probably more than 20,000 influencers. So this truly shows how capable some people are. So always never just find the right coin and run away and think is the end and then you made it. It's not true. 8. If you don't level up your research, you'll fall behind. The number of cryptocurrencies from 2013 till today is constantly increasing, right? But the problem is that also scams, rugs, Ponzi's are actually increasing too. So a lot of people are in the same research process they were last cycle, which you're doing a big mistake because you gotta elevate. The scammers are also elevating, and even the number of cryptocurrencies is only growing. Look at for 2016. We had like 700 coins, which is crazy. So the number of scams here was small. Even the research process here didn't need to be perfect because the numbers were small and you could navigate through it. But tell me what you can navigate today where you got millions of coins and you got millions of scams. So you need to elevate your game. You need to invest more in your knowledge. You need to invest more in mentorships, in mentors, in communities. You have to be like a machine of learning in order to not fall from this, because they're faking Elon Musk, Michael Saylor voices. Imagine what they're doing to coins. So you're gonna fall behind if you just don't level up and if you just look at the old research process. I know nowadays people are paying developers to go and read the code of a coin to actually know if there are some bugs or if there are some admin keys or some problems there. So you have to be really careful. By the way, if you want to get inside my private community, get me as a mentor, know also the coins that I'm investing for this bull run, I got a link below. You can hop on a one-on-one call with me and I'll see you if you're a good fit for the group. I don't accept all, so definitely book a call as I got some more spots for this week. 9. Buying a coin you find on social media is not necessarily I'm getting early. So how SHIB started? You know that BitBoys have claimed some dogs, basically the SHIB founder, which is actually Ryoshi, but the point is not here. The point is that SHIB idea was first discussed on a professional networking Telegram group, like it was an inside group with influencers, which was called Karma DAO. So this is something that shows how you can find early information. Now, everything on social media is great, but trust me, sometimes probably 80% of the time, you're not that early. The real early conversations and the real alpha information always find in the inner circles. How you can get there? By investing. What I mean with investing? Investing, having connections, having mentors, having communities, that's what you gotta do. And it's normal to actually information flow on those telegrams first before actually going in public. Because even if you got an opportunity today, think about it, with whom you'll share it first, with who you'll share it first. Of course, your inner circle, your friends, your family, people you care the most. So that's what also these coins do. Those coins get shared firstly with the people that have access. And if you invest and if you find access, you can find opportunities. For example, my community, that's what we do. I'm not saying I got some inside information, kind of this trash, but it's simple. When I find an opportunity, I share with people I care first. I share with my community, and that's how people get the knowledge and get the information, and that's how they're early. I didn't went and shared on social media that first. It's not that I don't care for you. I care because that's why I'm doing those videos, but you have to understand those principles, and that's how truly everything in the world works. If you're gonna build a business, with who you're going to share first. You're not going to tell all the world how amazing it will be. You're going to share with your friends and family and your inner circle. So if you have access on those communities and those people, you can find the information. So this is something that a lot of people don't talk about. But if you elevate your knowledge, if you invest more in your mentorship, mentors, knowing people, you'll actually have opportunities presented on you, and you don't actually need to do the research and be constantly learning and reading. That's what I do also in my community. I tell people what to invest exactly based on my research process that have been for 8 years. But that's an access. They pay to have access to this kind of knowledge. So it's not about my community, it's just about in general. You have to invest in order to get inside those communities and to access those informations. 10. Improve your ability to truly hear. The real problem with a lot of investors in crypto is that they have a problem with hearing and actually comprehending and understanding information when it comes from people that are capable. So when I actually called last cycle, I called actually the top of the bull run. I advised all to sell at the peak, right? Which was like an amazing call. But back then, people were calling me, you don't know what you're talking about. And actually, I shared for free. They showed hate, basically. Why? Because they couldn't hear. But they forget what they have achieved and what I have positioned myself in crypto industry. So if I'm someone that it's worth listening, which if I got proofs, then you should hear. And that happens a lot in crypto. I see a lot of people trying to act like big dogs and be like, oh, you don't know what you're talking about. Well, they forget that the people that are not knowing what they're talking about are them. Because you can't go and tell to Elon Musk, you don't know what you're talking about. I'm not saying crypto influencers are Elon Musk, but you get my point. So if someone got achievements and got proofs on those achievements, because achievements, everyone said, I did this, I did that, everyone can brag, but got proofs on those achievements, definitely take that advice or take it as consideration. It doesn't necessarily mean that you gotta implement. That's what I told people when I called the top. Like, people acted like idiots. They come to me and said, you don't know what you're talking about, we're gonna go up, it's unfollow button, all of this kind of stuff. And I was right, and they were wrong. But if they truly were like, look, this guy has achieved this kind of stuff, this guy has proofs, so at least maybe I consider that. So improve your ability to truly hear if something, an advice comes from the person that have achieved more than you do. If for sure you have achieved more than you do, I'll definitely listen to you. So this is a kind of the perception you gotta have. Don't try to actually be like a big dog and think like you know more than someone else if you haven't seen what he has achieved. For sure, on social media, you got thousands of people that pretend they have achieved something and they share an advice. But I'll definitely select wisely who you follow online. So if you got 20 people that you follow today on crypto, stop for a moment and go name by name of them and look what they have achieved. Ask yourself what they have achieved. Do they have proofs? If they haven't achieved nothing, if they have no proofs, I'll definitely unfollow, because why I should listen to advice to them? And when I say proofs, because here's a big misconception. The proof is not their lifestyle, their Rolexes, their APs, their Lambos, their Ferraris. The proof is things that could make you money, like calling a coin, calling the top of the bull run, having people which you can ask about them. These are real proofs, not fake proofs which you want to see. So be really careful with this, and definitely improve the ability to hear if it comes from the people that are smart and they have achieved something. 11. Tricky ways to make money will just keep you poor. I get messages all day about some special algorithmic trading or some robot or some arbitrage opportunities that people want to do, but I don't know why this obsession with people to actually follow those kind of cheating system ways to make money. While you can make money in crypto by buying the right stuff, holding till the right time, and getting out. It's so simple. People love to overcomplicate stuff, or I think people are not really good at finding the right stuff, so they try to find alternatives. Well, you gotta understand that the boring stuff will always work, and you gotta implement things that made real wealthy people rich. These algorithmic trading, these robot trading, these bots right now, I haven't heard anyone in Forbes list from crypto that did that and got rich. Like, look, those guys. You think any of those guys did those algorithmic trading or arbitrage opportunities? No. They either built a company or they either held for long term. So don't try to feel like you're cheating the system by putting some beautiful names like I'm doing this algorithmic trading, I'm doing these bots, this and that. Well, you gotta understand something. A trader will never outperform a hodler. So if you buy the right stuff at the beginning of the bull run and sell it at the top of the bull run, none of this algorithmic trading, none of this arbitrage, none of these bots will outperform you. So don't try to find tricky ways to make money. Follow what works, follow the boring stuff, and that's how you get wealth. 12. If you invest more, it doesn't mean you'll make more. A lot of people want to put more in crypto because they understand the potential and they be like, oh, I'm going to put more because this is a one-time in life opportunity, and I get that. But what they don't get is they think that the more they put, the more they make, which is not true. Because when they put more than they can really afford, they actually will invest with emotions. And when you invest with emotions, you're gonna be driven with them, and it's very likely that on a small dip you lose your mind, on a small pump you'll get super euphoric, and either you'll sell too early or sell in a loss. I've seen a lot of people can't actually achieve those proper gains that the coin has as a potential just because they overinvest. Let's say $10,000 is something that you can really afford to lose and you don't care. But you'll be in this mindset, look, I want to put more because I can achieve much more. Because let's say coin potential is 100x. If I put 10,000 and I make $1 million, it's nothing. But I want to make 2.5 million, so I think my life is going to change at 2.5. So I'm going to put 25k. 25k is something that they can't afford to lose. And what they do is they actually put that and they think they're going to handle the 100x. It's not true. They very likely will get so much early because they're emotionally involved. And I've seen so many people do this as a mistake. So definitely, if you want to put money, ask yourself, am I comfortable of losing that? And if you're not, definitely put less than that. Don't try to act like a big dog and brag how much you have invested. It doesn't necessarily mean how much you invest, it's how much you get. So either you're going to sell too early, either you're going to sell in a small dip because you don't want to lose it all. It's better to invest what you can afford. So definitely lower the amount that you want to put, and probably you'll likely achieve those gains that coin has a potential. Because if you put more, trust me, you're probably gonna get too early, and you don't get it right now because you're euphoric about putting more money and you're gonna think, oh, I'm gonna make 2.5 million. You're not getting, like, you go to 50k and you think like, shit, what if it goes back to 25 and then another opportunity comes and I miss that and this coin collapses? Like, your mind will be like completely a big distraction. And as I said, you don't understand it when you put money, because when you put money, you're euphoric about it and you're thinking only about 100x, but you don't get that you're probably never gonna go there with this kind of mindset. I'm gonna put more, so I'll make more. So be really careful from this thing. 13. Understand the investor's hierarchy if you want to succeed. The biggest problem that I see nowadays is people bragging about how BlackRock or how VCs are on their coins, which when I see this kind of stuff, I say, oh boy, you're gonna probably lose, because this is what people don't get. Now, your goal when you join in crypto is to make, let's say, 50x, 100x, and to change your life, right? Because this is something that changes your life. But VCs are actually not here to change their life, because they actually got so much money. So what they do is they join on crypto and their goal is way less than you. Your goal is, let's say, make 100x. Their goal is just 5x or 3x or way less than that, because they play the games with millions of dollars. You don't play the games, let's say, with millions of dollars all the time. I mean, the average retail, right? Then you got BlackRock, which BlackRock is actually more about percentages, right? It's not talking about X's. He's more than happy with, let's say, 30%, and his goal is mostly control of the market and a small percentage. So why this scheme is so important to understand? Because a lot of investors be like, oh, I'm gonna buy this coin because VCs are on it and it's supported from this guy, and this guy is a billionaire, got his trust fund and this and that, and where they don't get that if those guys are in, probably you should run away. Why? Because they're gonna crush the price. If you buy here, let's say this is a chart, right? And you wanna buy here, right? Your goal is to get here. Let's say not the exact top. Your goal is here. Those VCs are more than happy to get out here, and they got more allocation than you do because you joined here, right? You joined here. This is basically your price, right? You joined here. Those guys probably joined here. Those guys, they joined way lower than you, and they get way way sooner than you. And this is why it's so important to understand. Like, people couldn't comprehend this kind of scheme back in 2000 and in the last bull run. People in the last bull run went and invested and be like, oh, I'm gonna buy this coin because it's backed by big names. Like, big names are good, but they're actually here to make the profit. You gotta understand their scheme. It's nothing because, oh, they're scammers. I see a lot of people being like that. Oh, they crash the prices. It's their business. If you don't understand the principle of their business, it's your problem. It's same for BlackRock. You think BlackRock is gonna invest billions of dollars and be like, oh, I'm gonna wait for 100x? Of course not. So you don't actually need to invest on stuff that VCs are, or be in this mindset that I'm gonna put something because these big guys on it. Trust me, you gotta understand this investor hierarchy. You got different goals at institutions. Institutions play the games in a different level. You play the game in a different level. If you understand your competition, then you'll win. But if you don't understand and you try to jump on the other league, you'll probably risk a lot. To win, you have to bet on strong founders and leaders. If you take the real world, you can understand that if it wasn't for the leader or the founders, the majority of companies wouldn't be here. For example, Amazon, I don't think it would be here if it wasn't for this guy. You got Elon Musk. You think Tesla would be here if it wasn't for this guy? Like, people love those figures, and these are the figures that send the companies to the moon. You got Michael Saylor. MicroStrategy has outperformed, I think, all the companies so far in the stock market. Why? Because the move that he did with BTC, and he's a strong founder. He's basically a leader, and people love that. And this is why the same approach you gotta have on crypto too. You have to bet on people most of the time. They're also anonymous founders. I understand, like it was for Bitcoin, but Bitcoin is another thing because it created a revolution, right? But you have to bet on people. For example, in Ethereum, you got Vitalik. Might look like a nerd, might look like a geek. Who cares? He's actually a strong leader, founder. He's constantly delivering. So you have to always bet and look at this principle, because I mean, you don't want to invest in something where the founder or leader has no idea what they're doing. There are many great coins in crypto that got amazing fundamentals, but the founder or leader is not capable to deliver. And it's like a thing that drags down the project. If you got a strong founder and strong leader, the good project, it's like a double effect. It will affect the whole ecosystem positively. I mean, you don't want to invest in something that a founder has been involved in many scams in the past, because what are the likelihood that the next coin that he did will be a scam? So always analyze founders and leaders, because they play a key role in the ecosystem and in the coin that you put money in. 15. Crypto is an investment, not an income. Pay close attention to this because it's very important. You're going to learn so much great alpha here. So a lot of people joining crypto and they love to treat it as an income. They want to make some money on monthly basis. That's why they love trading, yield farming, algorithmic trading, arbitrage. So they want to build an income. But from my whole 8 years experience in crypto, I can say that crypto is the best if you treat as an investment and not try to do an income. For sure, you can make an income by trading, yield farming, all of this. I'm not saying you can't, but hodling and investing is what will provide the biggest gains, and that's how you get all the fruits of crypto. Because you might think like, yeah, but I want to trade, I want to create income. A lot of people message me all the time like that, which here's why it's a big problem, especially right now at the current time. Let's say you're trading capital. Let's put it in this way. Let's say you're actually trading capital. I don't know why I can't write here, but let's do it here. Let's say you got a trading capital of $10,000, right? Here you got $10,000. Now you're gonna trade this and you want to make a monthly income. Let's say you generate $2,000 every month for the whole year, right? And you'll be like, oh, I made the trading, I'm so good at it, I made money, I made an income. And what's that? You make like 24K, right? And let's say in general at the end of the year you got 40K that you made all in trading, right? And you'll be like, yeah, but I had an income. I get that, I understand that. But here's the problem that a lot of people don't get. $10,000 in the right coin, $10,000 in the right coin can actually be probably 200K or even more than that. 200K is not, that's a 20x, can be, let's say, 500K. And this is the opportunity that you lost. Like, you trade it, you stress yourself for the whole year, you made an income for sure, you provided your family, I get that, but it's just an opportunity cost. Trading, trying to learn to build an income via trading at the bull run is a really big mistake, because bull runs are precious. They don't come here all the time. Those kinds of gains, 50x, 20x, 100x, you can achieve only in the bull run. Well, you can learn to trade in the bear market. You can do trading in the bear market, but if you do this move right now, it's an illogical move, and you're gonna lose so much profit, because you'll trade so much, you'll actually create an income, but you'll miss so much opportunities. It's like an opportunity cost. You want 40k at the end of the year and brag about it, how good you are, or make 500k. So this is a big difference which you gotta understand. If you treat crypto as an investment, that's the best thing, and that's how you make the most money. Keep in mind something: no matter what you do, no matter trading, yield farming, arbitrage, you can be the best trader in the world, you can trade 24/7, but I can assure you, nothing outperforms a hodler. Last bull run, inside my private community, we did 200x in 9 months in one coin. Now, if you trade for the rest of your life, I'm sure you'll never achieve that in just 1 year, because you can never do in trading, put $10,000 and do 200k in 1 month, right? So sorry, 2 million, because you put $10,000. You can never do 2 million, right? And it's realistic, right? So that's what I'm saying, that if you treat crypto as an investment, that's how you make the most money. You can make an income, but if you want to make an income, you're gonna struggle a lot, and be sure to make it at the right time, because if you want to learn and trade right now, you're gonna fail at this thing, and you're gonna miss so much profits. And when you understand what I told you here, it's probably gonna be too late. So please be careful with what you apply, and the best thing is that you treat crypto as an investment, and you'll struggle the most if you do this kind of stuff too. You can achieve this income, but you'll struggle. Here is actually a proven thing that has been working for many years, since the 2013. 16. The power of smart money is what drives the trading industry. A lot of people don't talk about this because that's their general income, and influencers never show this because they're afraid, because that hurts their reputation. That's how they make money. But I don't care. I show you this kind of stuff because I don't get paid to shill. I actually make money in crypto by myself, and I actually try to teach people how to do that, and that's how I actually get paid too. I don't get paid from exchanges, I don't get paid from shields, I don't get paid to scam people, none of that. And if you follow me for a while, you know that I never shared a coin or got a promotion on my end. So the power of smart money is what drives the trading industry. So a lot of people actually think that trading is big, and a lot of people that join in crypto be like, yeah, I want to learn how to trade, I want to be this, I want to live this life. Why? Because of the influencers. And influencers show their lifestyle, they're living in crazy lavish lifestyle, cars all over the places, and they love it. They want that kind of lifestyle, but they're here. They don't understand the scheme, where it comes from, right? People watch only here. People watch influencers, try to learn and be like them, while they don't get who are the big dogs. The big dogs are exchanges. Exchanges got referral links and got bonuses. So the scheme is simple. People that founded something, which I told you earlier, who gets really wealthy in crypto, founders, hodlers, who founded the exchanges, the guys that actually are really wealthy. What they do, they got referral links. Referral links are people sign up, and the people that actually share the link get paid. They got bonuses. For example, if 10,000 people join, you gotta get, like, let's say $1,000, this kind of stuff. And what they do, influencers get those bonuses, those referral links, and they got huge audiences. And what they do is they promote those exchanges, those links, those coins to the people, and people be like, oh, I'm gonna be like this trader. So the power of smart money, which is this here, is what drives the trading industry. Trading is not that big, it's smart money that makes that big. And if you understand this scheme, you understand that the real money is here, if you found or hold for long term. The real big dogs, the real wealthy guys are people here, are not the guys that you trust on social media and you trying to be like them. So this is something that a lot of people don't talk about it. And they don't talk about it because their main business is here. Look at all the people you follow. If they actually get paid to shield, I'll definitely unfollow them. Why? Because they don't care for you. You're just a consumer on their end. They actually don't care. They get paid from someone to shield you something that might be a scam or they got not integrity. So definitely I'll get rid of people that get paid to shield, and 90% of people in crypto get paid to shield. So be really careful. You might ask, yeah, but you got a community too. I agree, I got my community too, but I actually make money in a honest way by making people rich. I don't actually make money in this kind of scheme, and I had this opportunity to do that, but I've never chosen that path. So be really careful from this, because they don't show you all of this kind of stuff. 17. Prioritize security before looking to make money. And this is the last thing, but this is the most important thing. I see so many people joining in crypto and trying to actually find the right coin while they don't prioritize security or have any idea about hardware wallets, how exchanges works, how this wallet works. They'd be like, yeah, I want to buy this coin and get rich. You need to understand something. I have so many stories that I know people that lost millions of dollars just because they acted quick and they want to build this wealth. You need to prioritize security first. If you don't know how to store your coins safely, definitely you should learn how to do that. The best setup which I've come up with is have a device only for crypto, which would be a laptop. Definitely I suggest MacBook because it's less vulnerable from hacks, and I would definitely recommend buy something new. Don't trust used, don't trust refurbish these devices. Just buy a brand new from box that you are safe. You don't need to spend so much time and money on that. Just buy some basic MacBook Air. I don't know what was the cost for that, but buy brand new, don't buy it used, and make sure that only this device you keep it for crypto. Don't download something, don't open movies, don't click any links, don't do anything with this laptop besides crypto. So keep it only for crypto and use it as rare as possible. So don't go on Instagram, don't go on social media, don't click anything here. Then you get a Ledger or Trezor, any hardware wallet, and then you can connect it with MetaMask. And you use this setup, and then I believe you'll be fine. Now, there are actually some more actions you can take to actually be more careful, which I'm going to show you. Is basically you can have two kind of accounts, right? So let me do like that. This is one account and this is another account. Here you actually keep the most money, right? I'm doing like this. Here you keep just a few money. Now, what you do is both of these you get connected with Trezor, right? Trezor, Ledger, all hardware wallets. The difference is here. On the device that you got the most money, you actually keep this only for sending and receiving tokens. So you don't do swaps, you don't do transactions like bridging or swapping here. You do only for sending and receiving tokens. The wallet that you got the least money, you keep for swapping, for bridging, for, I don't know, yield farming, for airdrops, you keep this. And let's say the worst case scenario, you get hacked at this, which is so rare. Still, you don't risk the majority of money because you keep only for sending and receiving. And this is the best setup. Prioritize this, please, because you don't need to make money if you don't know how to actually save that money first. Because I have so many stories on people losing millions of dollars just because they want to be quick. So hope you learned something. Definitely please like and subscribe for more, and I hope you enjoy this one.